Hello students, welcome to castuff.in. Today let us discuss topic on income from house property head. Why government is levying income tax on house property? Because it may involves rent receipts. So government wants to tax rental income under this head. Say John is owning two houses. In one house, he wants to stay, and other house he wants to let it out to Sundar. In this case, John is earning rental income. Now, who has to pay income tax? Obviously, owner of the property. In this case, John has to pay income tax. House in which John stays is termed as self-occupied property. House which was let out to Mr. Sundar is let out property. Now, on what amount John has to pay income tax? Suppose, John and Sundar are relatives, and due to this, John is receiving nominal amount as rent, say 1000 rupees against 5000 rupees of actual rent. If John pays income tax on 1000 rupees of nominal rent, government is receiving lesser income tax revenue. In this case, John is supposed to pay tax on Rs. 5000, which is the actual earning capacity of house. And that is the reason, under this head, income from house property is calculated based on the earning capacity of the house, that is annual value of house property. Actual rent receipt is ignored. It is an exceptional feature of this head that rather than actual income from house property, earning capacity of house property is taxable. Meaning of the word appurtenant to the building. It means land connected to building. Assume Mr. John has let out his house along with land connected to the building, then the question comes here, is income from letting out of land is taxable under the head house property or not? It is commonly seen fact that many of the independent houses will be surrounded by land till the compound wall, and thus, taxing of income from land under any other head is meaningless. Land appurtenant to a building includes car parking area, approach roads, backyards, courtyards, extra attached to such building. Conceptual understanding. We will discuss section 22 of income tax. This section gives power to tax income annual value of any building, including the land appurtenant thereto under this head. Let us see what this section says. Annual value of property consisting of any building or land appurtenant thereto of which assessee is the owner, other than such portion of such property as he may occupy for the purposes of any business or profession carried on by him, shall be chargeable to income tax under the head. You can find three main elements in this section. First one is there must be a property consisting of any building or land appurtenant thereto. Second one is assessee as the owner, including deemed owner of that property. And third one is such property is not used in business or profession. That is, if building is used for business, annual value of such building is not taxable under house property head. What is the definition of house property? Whether house without roof, also termed as house property. House property is not defined in this act, but various courts have given judgments on what can be considered as house property. Some important cases will be discussed now. Vacant land is not a house property. It is taxed under either as business income or under other sources. A large stadium or open-air swimming pool is also considered as building. If a building consists of several flats, then each flat is considered as a separate house property. Roof is not necessary for a non-residential house property. Annual value of a property is assessed to tax only in the hands of the owner, even if he is not in receipt of any income. Any person other than the owner, even though he is in receipt of rent, shall not be liable to tax under this head. That is why, income from subletting is not taxable under this head but under the head, income from other sources. Assume, John has let out his house to Sundar and Sundar in turn let out to Mr. Robert. Profit earned by Sundar on subletting to Robert is taxable under the head income from other sources.